Before applying for a mortgage, here's what you need to know about DSR. It's not Datuk Seri ratio, but it's debt service ratio. It is a calculation of a person's total debt in relation to the household income. It is one of the methods used by banks to measure someone's ability and whether the bank should lend to the person. And not only debt service ratio, other factors that banks take into account when deciding on lending money are your CRIS or CTOS report, property valuation, loan to value or margin of financing available to you. So in this video, we will be specifically looking at the debt service ratio, or in short, DSR. And before we continue, you can follow me on Facebook and Instagram to stay tuned for more info on finance, investing, real estate, and more. So how to calculate DSR? DSR may be calculated using the following formula. Debt divided by net income times 100 equals DSR in percentage. So that is all financial obligation or commitments that need to be fulfilled, such as personal loans, student loans, and credit card repayments. The net income is whatever income you may make after deductions, such as income tax and EPF payments. In Malaysia, most banks accept DSR that within 70%.
Wait a minute!
So let's do a simple DSR calculation by example. Let's say you are a working individual with a total family monthly income of 10,000 ringgit. After removing the deductibles, like your income tax and EPF payments, let us say your family net income is approximately now 8,600 ringgit. In this case, in order to have a DSR ratio of 70%, your total debt must not exceed 6,020 ringgit, because 70% times 8,600 ringgit is 6,020 ringgit. Now, let us assume that you have other financial obligations such as car loan, credit card payments, and student loans. So for the sake of this example, let's say you have a car loan of 500 ringgit, credit card repayments of 400 ringgit, PTPTN loan of 100 ringgit. So that makes your total financial obligations 1,000 ringgit. In this case, your total debt threshold will go down further to 5,020 ringgit, because 6,020 minus 1,000 is 5,020. Therefore, you should check your financial situation before you start applying for a housing loan or mortgage, since your debts may limit your options. Then how DSR may affect your home loan eligibility. If you're looking to buy a house in Malaysia, your DSR should be generally within 70%. Most banks generally have different DSR levels that they are willing to accept. Some will only accept a loan application if the DSR is significantly lower than 70%. So banks use DSR to decide how much of someone's income is used for loan payments and other forms of debt. This in turn helps them to figure out if a person can take up the housing loan that they are applying for. And with that being said, banks prefer persons with low DSR because it indicates that you are most likely able to pay your loan on time and that there is a lower risk of default than a bank's debt to service ratio. So even though the common understanding and standard is 70% DSR, every bank uses its own calculation method for income and commitment recognition. So it is quite common for two banks to come up with different DSR value for a person. And what's more, every bank has different guidelines for the maximum DSR threshold, but they are normally affected by income level and even other factors such as qualification and age. So let us take a few examples here. Bank A may base their calculation on gross income, while Bank B and C base it on net income. Then Bank D and E may recognize 100% of a person's rental income, but Bank F and G only recognize 80% of the rental income. Then Bank H and I may consider 100% of a customer's foreign derived income, while Bank J may only recognize 45% of a customer's foreign income. So when you do apply for a home loan, and if you do happen to get rejected from a bank, don't give up. Try other banks. If you still fail after a few tries, then give the application process some breathing room, pay off some of your outstanding debt, and then try again. So I hope you found this video helpful and that now you can make better and more informed decisions when you apply for a home loan. So for more on today's topic, I'll put the links in the description, and don't forget to like this video and share it and subscribe to this channel to stay tuned for more real estate, investing, finance, and home care tips.